Okay, we're now at tab 30. We're going to call on Robert Chandler to give us kind of the economic forecast and presentation on economic growth, which is really the kickoff to our budget for 2017.
Mr. Chairman and Commissioners, just in terms of framing where we're going on this thing is this morning officially kicks off our budget cycle for fiscal year 18. And one of the things I like to do is start off with an economic forecast in terms of what the board can expect in terms of a climate. And we've had a number of people come in and address the board, but the presentation I was the most comfortable with was Robert's, because he really has his finger on the pulse in terms of the various literature and the economic experts in terms of what they foresee. So the way I see this is Robert's going to basically do the economic forecast, and Steve's going to come behind him and talk about the millages and the revenues for fiscal year 18. And then I thought what we could do is I've gotten the majority of y'all's list from the retreat for next week, and a lot of that, there's a number of issues on that relate to the budget. So I thought next week as part of the retreat, we could get into a greater detail with the board in terms of things y'all want to see in the budget this year. So that's really the framework, and then we'll talk about the calendar.
Thank you, David. Good morning, Chairman, Commissioners. Robert Chandler, Director of Economic Growth. Today I've kind of got a two-part presentation. The first part will be the 2017 Economic Outlook, and then we have an abridged version of our Economic Development and Tourism Update to cover activities through the fourth quarter of 2016. So again, that's the purpose of the presentation. Getting to the outline, we'll start out with the Economic Outlook, give a national overview, dive into the national indicator forecasts, get into the state, regional, and local overview, and then a comparison of the state, regional, and local economic indicators. Jump over to the quarterly report where we will touch on economic development and then tourism. So looking at the economic outlook, I'd be remiss if I didn't say that 95% of the data in here is gathered from other resources. So this is things like Wells Fargo, National Advisors from Sean Snaith, from Hank Fishkind, any number of economists and projections and forecasting services that we utilize to look at the economy and the trends. So this is a compilation of all of those. So starting out with the national overview, we're 7.5 years into the current recovery. The average recovery since World War II is just under 5 years, so we are about 50% longer than the average recovery since World War II. Longest expansion was a 10-year stretch in the 1990s. We do have some significant momentum moving into 2017. Consumer spending remains strong in 2016 with confidence at the highest level of the current cycle. Job growth increased at a healthy pace, pushing employment below 5%. Most economists believe that the country is back at full employment. So there is an underemployment problem, but we have reached full employment. So you might have had a job paying $80,000 before the recession. Now you might have a job paying $40,000 or $50,000, again nationally, but it is back to full employment based on most of the economists. Housing markets definitely strengthened with a focus on multifamily. Non-residential construction has improved with private sector investment. Inventories were managed more closely, so the inventories did not grow as much as they have in the past, which limited the risk of recession and also is going to help in the future as these companies build their inventories back up. Towards the end of 2016, we saw a stabilization of energy prices based on where we were last year when we had the crisis in China and everything else going on that caused some volatility in the oil prices. And all 6-month forecasting models placed recession probability at less than 10%. So first half of 2017, less than 10% chance of a recession based on the national forecast. So the projections for 2017 and 2018 have remained largely unchanged as a result of the election. But what's important to note about the Trump election is that the projections are less about the actual growth rates and more about the volatility. So based on the uncertainty with policies and what direction some of those policies may go, that cone of probability has gotten larger, but the actual growth projections have remained largely unchanged since the election. We should see continuation of solid growth driven by improvements in consumer spending on job, wage, and income growth. as well as effect from improved home values and strengthening financial markets. Some potential risks to monitor in 2017. The impact of interest rate increases on the housing market, and that's certainly going to have an impact. Increasing property price indices for apartments and office properties. Currently, office and apartment properties are above pre-recession norms. Credit adjustments in China and Europe. Recent drop in business spending on machinery and equipment, and then increased healthcare spending. So these are just some of the risks that could dampen some of the growth prospects for 2017. So let's dive into some of the specific indicators for the national economy. Start with gross domestic product. Again, the probability of distribution is now greater than it otherwise would have been, but the actual number, the average of that is still the same. The potential combination of tax cuts and reduced regulation would lead to increased consumer and business spending, with consumer and business spending being one of the largest contributors to GDP. That's a positive sign. Economists do expect consumer spending to once again drive GDP growth in 2017, and GDP growth has averaged roughly 2% growth since the recession. We did end up 2016 with a slowdown to about 1.5% due to the impact of the energy slump, but we do expect that to rise back up in 2017 to about 2.2%. So here you can see the last 3 years, 2014, 15, and 16, with the 2017 and 2018 projections for national GDP. Moving over to inflation. Inflation trends represent a reversal of the recent risk concerns. So where deflation risks were high in recent years caused by falling commodity prices and a sharp strengthening in the dollar, now pressures are building. The risk is no longer about deflation, but whether the economy is prepared for rising inflation. I think that's really where we need to be pointing our sights to. And higher inflation will certainly negatively impact the household income growth in 2017. Continuing tightening in the labor market will be the greatest source of inflationary pressure. Economists expect for labor costs to increase by over 2.5% in 2017. Currently proposed policies by the new administration could influence inflation pressures. You're looking at greater deficit spending, you're looking at tariffs on imported goods, and faster credit expansion if Dodd-Frank is cut back. Here's the Consumer Price Index looking forward. You can see almost no upward movement in 2015, bumped up a little bit in 2016, and then we're looking at 2.5 and 2.6%. So that's your general gauge of inflation there with the Consumer Price Index. Moving to interest rates, markets already have high expectations for stronger economic growth through the elections. Fiscal policy expected to shift to a more normalized approach that would typically be adopted during economic expansions. So we've had an economic expansion now for 7 years. Given the uncertainty related to that expansion, the Fed was unable to do what they typically would do with interest rates. So we believe that you're going to see more raises in the federal fund target rate this year. They're expecting 2 raises this year, and the 10-year interest rate outlooks have been low recently. However, the range of possible outcomes is much wider now due to the election. So here's the federal funds target rate. You can see that looking for a target of 1% in 2017 and 1.5 in 2018. That will obviously drive all of the other interest rates that are charged. And the 10-year Treasury note, 1.82 in 2016, up to 2.5, and then 2.66 in 2018. So looking at business spending, business fixed investment is expected to improve modestly as the drag from energy-related cutbacks wanes. After falling in 5 of the past 6 quarters, equipment spending is expected to pick up in 2017. Increased equipment spending will bolster productivity and offset rising wage and benefit costs. Lower corporate tax rates, should they occur in a dialing back of regulation, would also drive investment in new plants and equipment. So there is strong hope and projections for business fixed investment, and a lot of that is what drives economic development specifically. So those are great numbers for the expectations for 2017 and 2018. In terms of energy prices, crude oil prices ended at in the end of 2016 at roughly double the 12-month low. So those numbers did come up significantly from the beginning of 2016, but they started to stabilize. They have stabilized because of OPEC meetings resulting in agreements to scale back production enough to support the higher prices. The key that you need to notice on this slide, though, is that if prices hold at their current levels, the energy sector will benefit considerably because the break-even prices for oil production have fallen because the energy sector has gotten much more efficient during these downtimes. So there's some positives that come out of recessions and the volatility. So you can see here the crude oil per barrel prices, $44.90 average in 2016, looking for $58.50 average in 2017, and $62 in 2018. Retail spending. Once again, consumer spending drove the economy in 2016. After a strong 2015, retail spending grew. Higher costs for out-of-pocket health care will continue to hurt discretionary spending. However, wage, income, and wealth gains will continue to boost retail spending in 2017, and it's expected to go up an additional 4%. I saw today in terms of small business optimism, which is somewhat related to retail spending, but more related to the business fixed investment. The largest single month gain since 1980 was last month in terms of small business optimism. So that's an interesting data point. So here you go with the overall dashboard here. GDP expecting, this is for 2017, expecting GDP to be up 2.2%. 10-year Treasury note to go up to 2.5%. Inflation up 2.2%. Business spending up almost 3%. Energy prices up 30% again, mid-40s into the 50s, and then retail spending up a little over 4%. Looking at the state, regional, and local overview, Florida growth rates have returned or exceeded historical levels and continue to show progress. And these are some key factors here. All personal income metrics, half of the employment sectors, and all tourism counts have exceeded their prior peaks, so we're at all-time highs. Most other measures that haven't reached those peak levels are experiencing solid year-over-year gains. So in almost every single metric statewide, it's very solid growth. Florida growth rate continues to surpass that for the national economy. The real gross state product is expected to expand at an average rate of 3% compared to 2.2% for the nation. Payroll job creation is expected to expand at a rate of 2%. Payrolls finally recovered to their pre-recession highs in May of 2016. That's another important data point. Finally got those payrolls back to where they were prior to the recession. The faster pace of payroll job creation has sparked Florida's labor market, leading to labor force growth of just under 2%. And now we're on the flip side of that unemployment calculation where you talk about the funny math. So in a lot of times that labor force number drops, it looks like your unemployment rate's going down. It's really not. You just have a lot of people fleeing the labor market. We're going to be on the opposite side of that coin. We've got a lot of people coming into the labor market. That labor force growth at 2% per year is going to keep the unemployment rate from dropping much farther. So they do expect it to continue to drop, but those drops are going to be a lot more shallow given the fact that the labor force numbers are very high. And one of the strongest indicators of a strong economy is that labor force growth. So you want to look at what kind of hope do people have. If they're joining the labor force, they have hope that they'll be able to find a job. So job growth is expected to be strongest in the following sectors in the state of Florida: construction, professional and business services, trade, transportation, and utilities, education and health services, and then leisure and hospitality. Again, in a market dominated by tourism, it's interesting to note that that's fifth on the list of where those job gains are going to come. So the diversification is happening within the state of Florida. Housing starts flattened out in 2013 and 2014. However, in 2016, the market did recover for housing in the state of Florida. Increased demand, population growth is back to almost record highs, which is something we did not expect after the recession, but it's happening, it's back, and shrinking pool of foreclosures. Zillow just came out with a report that said the Orlando market is going to be the #1 market in the country for housing in 2017. So interesting stat there. Real personal income growth is expected to grow through 2018. Retail sales are expected to grow as a result of a strong labor market, low gasoline prices relative to where they've been historically, and rising home values. So if we look at the MSA specifically, that includes Lake, Orange, Osceola, and Seminole counties. We'll show varying streaks and weaknesses. The population growth is expected to rank second in the state. We have 16 MSAs. Population growth will be second. Employment growth should be the highest at 3% annually. Personal income growth will be the second highest of all MSAs at 6.3%, and job growth expected in the following industries: construction, professional and business services, education and health services sector, and no sectors are expected to experience declines. So that's another important piece of this. When we look at Lake County specifically, poised for significant gains, no question about it. We saw employment, job, and wage gains reach 10-year highs in 2016. So that's decade long. We're talking middle of the recession. The growth rates that we're seeing year over year are starting to match those that we saw back in the pre-recession days. Annual wage increases were the highest in the MSA, with job gains coming second in the region next to Osceola County. So our wages finally are starting to surpass the region. And while not at pre-recession levels, residential permit activity continues to experience significant gains at about 40% average each year over the last 4 years. That's countywide residential permits. So the housing numbers continue to be strong as well. And population growth in the MSA continues to push more desirable development patterns to Lake County, the type of growth that we're looking, the non-residential growth, the housing growth in the types of patterns that are desirable for us here. So let's look at some of the comparisons. We'll go through each of these indicators. We don't have a gross product for Lake County, so you can see here Florida compared to the Orlando MSA, considerably higher in the Orlando MSA than the state of Florida. When you look at employment, you can see state of Florida, now we've added Lake County in green, the Orlando MSA is there in blue. When you look at the projections for employment gains, Lake County is expected to be slightly below the MSA, but above the state of Florida for 2017. Unemployment rate, again, you can see those significant drops from 2014 down to 2016, but those drops, we're going to maintain these numbers. We're just not going to continue to see the drops in unemployment. That's a good thing in this case because the labor force numbers are coming up. Employment's going to be up, but so is labor force, which messes with that calculation. Housing starts. You can see here, Lake County's been leading the region in terms of the percentage gain. Now, a lot of that has to do with the fact that we have a lower basis. We don't have as many housing units, so it's easier to get a higher percentage. But the numbers are what they are, and we expect solid gains in 2017 and 2018. Average annual wage, 4.1% growth in 2016, slight drop in Lake County in 2017 and 2018, but we're going to be trending at or above the state and the MSA. Taxable property values, based on all of these other factors, you throw all that in. We were looking at, we had, I think, a 5.9% last year. We're looking at a 6.8% growth in taxable property values in 2017 with a 7.1% in 2018. Here is the dashboard for 2017 for Lake County only. Unemployment rate is going to drop slightly to 4.6%. Employment numbers are going to be up 2.7%. And again, employment means those folks who live in Lake County and have a job. So they might not necessarily get those jobs in Lake County. That could be Seminole County, it could be Orange, Osceola, Marion, wherever the case may be. Housing starts up 15%, expecting another increase in wages, looking to be around 4%, and taxable values just under 7%. Are there any questions on the forecast before I get into the fourth quarter update? Okay, I'll keep moving then. So broken this down into the different areas of our business services. Start off with business attraction and recruitment, and we've switched up the way we categorize our leads now. So these represent leads, and before what we would do is we talk about probability, highest probability, medium, and low probability. At this point, it's hard to tell really what those probabilities are. We believe we have an idea, but we might not. So what we've classified them now then is hot, warm, and cold. Are we working these leads really hard right now? Have they kind of cooled off, or are they dead and in the background? So you can see in the past, was all of 2016, we had 29 projects, 2 of which we won, 3 losses, 3 that are very hot right now, 9 that are warm, and 12 that have kind of gone cold on us. And you can look at those statistics over to the right. On the hot side, you've got 641,000 square feet that are sitting out there that we hope that we'll be able to land those deals here soon. 208 jobs with an average wage of $40,000. In Lake County, our average wage currently is around $35,000. So anything we can do to raise that average wage, that's obviously a good thing. And you've got about $88 million in capital investment with just those hot leads. In terms of the lead source, you've got 19 of them came through Economic Development Tourism. Those came straight to us. About 10 of them came through Metro Orlando EDC and or Enterprise Florida. The breakdown of industries, you can see manufacturing led it with 14 leads. So the project wins, and this is a big one. As you've seen in the newspaper, Samsung leased the majority of the Circuit City building. So that's a building that sat largely vacant since Circuit City went into foreclosure or bankruptcy, and they're 60 jobs they're creating, and over 600,000 square feet of that building will be leased out to Samsung for appliance distribution. And we're excited about that one, looking forward to working with those guys. And then the Lady Lake Outpatient Orthopedic Center is a project that we've worked on up in the Villages area, 80 jobs, average wage of greater than $50,000. Some other just topics, just updates for you. We are finalizing our Wellness Way Strategic Advisory Services RFP and interlocal with the City of Claremont. Hopefully we'll be able to get that out soon. Obviously, you know, the situation with Wellness Way. But in addition to that, we're also going to hopefully bring in Mount Dora so that we can do a similar concept with the Wolf Branch Innovation District. Both of those projects are very similar in that there's lots of parcels. They're really planning exercises at this point, and now what we need is the execution on how do you bring all of those pieces together to ensure that the goals and objectives of the plan are executed appropriately. Kelly's group, the communications department, are working on our economic development website to upgrade that. We originally built that in 2013, 2014, so as you know, every 2 to 3 years you got to update these things to make them more relevant in today's digital economy. So we'll be working on those to update that. That's going on right now. We're finalizing an economic development grant program that we'll be bringing back to you within the next couple of meetings. We're also tracking the Orlando EDC merger with the Central Florida Partnership for the potential impacts to Lake County. I think that's going to be something important to watch over the next few months is how does what's going on with the EDC impact what we're trying to do. And then finally, we are finalizing our retention and compensation improvements to the critical building services staff. That's something you asked us to bring back. And while that is more with the building services division, that obviously has an impact on economic development. So it was an important piece to include here. When we talk about business retention and expansion, helping our existing businesses with support, we've got South Lake Hospital's expansion. They're breaking ground in Leesburg on an outpatient clinic, I believe. South Lake BOC has moved to Mineola City Hall. That happened over the break, and we're excited about getting them down closer to the employment and population centers in Claremont, Groveland, Mineola. We are working with Claremont on a partnership to bring more entrepreneurial support services to Lake County, so that's something that'll be coming to you hopefully within the next few months. We've got our workforce task force continues to bring together all of our workforce partners and move things along on some of these projects that can help out our workforce environment. And then finally, this is just kind of one of those unique things that we were able to do by putting some pieces together. December 5th through 11th was National Computer Science Week, and we worked with the schools to help organize an Hour of Code event to introduce Lake County students to software coding. So when you talk about technology, you got to get these guys started on it young, and so that's one of the things that we've been working on to try to help include that in all of the support services. In terms of economic development coordinator activity, as you know, we have 3 economic development coordinators. We break down their daily activities by job, or we call them jobs. Level 1 job will be anything that takes less than an hour. Level 2 is 1 to 10 hours. Level 3 is 10 hours. So you can see we have 324 total jobs. 63 of those were level 3. Those are major jobs that took significant time to help with a customer. We did 456 community outreach events and 232 site visits for a total of 688 events and visits. In terms of tourism activities, numbers are still trending about 7% up with the TDT revenue. That is largely due to increases in room rates. So our room night demand is up to flat. That's something we're seeing across the state. But our hoteliers have been able to raise their rates pretty significantly this year, so that's been a good thing. And you can see here the projection. We're looking to be at about 2.75, 2.8 million for 2016 when the final numbers come in. In terms of capital projects that are of interest, the Hickory Point Beach Fieldhouse, Lake County Water Authority is currently reviewing the draft of the revised lease. We had to update the lease for Hickory Point Beach because it did not include this new building we're looking to build. The architect is finalizing the building design plans, and the Lake County Water Authority lease and the USA Volleyball licensing agreement will be brought back to the board here in the next few weeks for approval. Lake County Disc Golf Trail, still moving forward on that. We're anticipating delivery of the agreements to the cities and the partners by the end of January. And if the approvals are all received, hopefully bring that back to you in March or April and get going on construction of these courses in spring, summer of 2017 with the hope of having it all completed by spring, summer of 2018. Finally, the canoe kayak competition course as part of the canoe kayak national championship that's coming this August. We needed to have a canoe kayak specific course installed in Claremont. So we're working with Claremont, we're working with the South Florida Canoe Kayak Club to ensure that that course can be built and will be ready to go for the event, and that's another contract that we'll be bringing back to you. Marketing and advertising, we are finalizing our informational kiosk RFP. That's something that we brought to you earlier. So those are the touchscreen kiosks that we're going to be putting in strategic locations around the county to kind of replace that bricks and mortar welcome center concept that we've had for so many years. And then finally, our LakeBigBass.com endorsement of Tim Frederick. You approved that last year, and just want to show you pictures of his Tahoe, or is that a Suburban? Either way, it's now he's got that wrapped. So as that thing's driving down the road, you can see Lake County's getting a lot of exposure. And if it wasn't for this sponsorship, just to let you know how these things can kind of ripple through, Bass Southern Open is here this week. FLW is here in 2 months. The FLW tour stop is it's a major stop. Without this endorsement, we don't get that stop. So it just shows our commitment to the sport. Wings and Wildflowers Festival, we had a high participation rate in classes and tours. However, our daily attendance was flat compared to 2015. So what we're doing right now is researching these attendance trends, researching the exposure we got from the event in 2016 to best determine what our strategy should be for birding in Lake County moving forward, and what role should the Wings and Wildflowers Festival play in that. So I think it's time. We've done it for 5 years. I think we need to evaluate it, look at every aspect of this festival, every aspect of what we're doing on birding to make sure we're doing the right things. We're doing that currently, and we'll bring that back to the board as well. And I want to reiterate, though, that any analysis that's done is with the expectation of strengthening our birding, not to take away from it. It's just what's the right way for us to do it. It needs to continue to be a focus for marketing. And then finally, just to give you an idea of what to expect, some of the big events that we've had a hand in for 2017, you've got the Bass Southern Open in Venetian Gardens. And another interesting piece of this is these events are all over the county, so that's the great part about it. It's impacting everywhere. The 4th annual Harris Chain Bass Pro Big Bass Tour, that's the old Oakley tournament. FLW Walmart Tour Stop, a lot of heavy fishing here in the January, February, March. The Spring Games softball tournament down in Claremont, Leesburg Bike Fest. NAIA Softball World Series, that's a new one that we won this year with the Central Florida Sports Commission together and PFX. We bid on that event, and they were able to win that World Series. USA Canoe Kayak National Championship, it's going to put the Claremont Boathouse on the map, hopefully. NCAA Division III Golf Championship has been here for many, many years. We're continuing to build that relationship. And then the Pro Foot Volley Tour Stop, I wanted to include that on here just to let you know that Hickory Point Beach isn't just about volleyball. And that's one of the great things about our staff is they go out and they're constantly looking for new ways to optimize our existing assets. That's a emerging sport. It's not at the level of beach volleyball or disc golf or any of these other ones, but it's an emerging sport that if we can get a couple of tournaments a year and bring some folks in and build that, that's certainly a good thing for Lake County. So that concludes my presentation. I'm happy to answer any questions. We do. We have, yeah, I'm sorry, I didn't include any of those on here, but yeah, there will be plenty of beach volleyball tournaments, yes. More than we've had any other year, absolutely. Yes, ma'am.
Chair.
Go ahead.
Thank you for your presentation.
Sir.
Obviously, some good reasons to be cautiously optimistic.
No question.
Good way of putting it, perhaps. I appreciate that your group continues, your team continues to reevaluate. You mentioned the Wings and Wildflowers. Nothing is free from evaluation on a yearly basis, and I appreciate that. I think that's a good approach. Obviously, good business-like practices. And just a comment, follow up a little bit more to the canoe kayak. Some of the commissioners may have heard this, but this past week we had Grand Valley from Michigan. Their entire rowing team was about 100 or so rowers spend the week, and they very much loved Lake County. They didn't just spend time in Claremont. As I understand, they went some other places as well, and they will be back again next year. And that is, it took us a little while, but that was a goal, is to have that winter training for rowing, and now canoe kayak will be the same thing occurring there on Lake Mineola in Claremont. So that went over very well. They were very pleased, and they were spending money staying in Lake County. We confirmed that, all of them spending lots of money, so we appreciate that.
We actually have, and just to show what canoe kayak is already doing, just getting the canoe kayak national championship, we've got contingents from Singapore, from Denmark, from all these different countries that are coming over here to train in Claremont now for canoe kayak. I mean, it's happening. You can see it. This is a very tangible impact from just winning the event. It's pretty
Then you've
cool
got to,
stuff.
live up to their expectations.
Sure.
You've got to live
Now-
up to their expectations
That's
when
the
they
second
get
half.
here. Yeah.
Yes, absolutely.
Sure do, but I've heard just on Saturday that the University of Michigan is also interested in switching their winter training from Tampa to us next year, so that's some other good news.
Yeah, our
For
traffic is a little bit better than
Yeah.
Tampa's. So.
Yeah.
Very much so. Very much so. Good report, Robert. It's important to note that the gross domestic product, and I sat through this in my professional life, that it's had an average growth rate over the last 8 years of about 1.9%, whereas the traditional average is about 3%. So on a national level, for it to get back to its norm, it's got to increase by 33% when you think of it. So it's a huge number. So we're very blessed in Lake County to have people working at it every day to move our local economy forward. So it's not just one fix. We touch a lot of different areas: sports, tourism, industrial. An example is what you brought up about Samsung moving into our warehouses and so on and so forth. So thank you for the work that you do, and keep us informed.
I got a little piddly thing on the Hickory Point project, and I keep bringing this up, and I just want to see if y'all can kind of take it across the finish line. The fencing out there.
Yes.
And I've mentioned it to the Water Authority folks, and there seemed to be some concern that with the bridge being, changed, that would take out those fences anyway. But I think most of that is on the other side of the road, the realignment that has to do with the Howie Bridge replacement. So, the prototype that our Parks Department has used is just so great. The one that's down at the Lookout is the one in particular that I think would look really wonderful along there. But it's just a shame that the facility's great, but the impression you get from State Road 19 is just not that great of an impression because of how dilapidated and old and worn out that fence is.
We'll take care of that.
Commissioner Parks has
Another, I think, quick question. You mentioned the confidence for small business was, in one particular month, was the highest it's been in how many years?
Since 1980.
Since 90. That's impressive. And that was, what month was that?
The growth, it's on the front page of Judge Report if you want to go read the article. But it went from something like, the index went from 90 to like 110, and it's been bouncing around between 80 and 90 for years. Whatever that index is, I don't follow it closely, but just, anytime you see a gain in a month, that's the most you've had since 1980.
And that was recent, so that's why I guess.
That was last month.
That's exciting, perhaps, with the national level, what changes.
Sure.
Yeah, good.
Okay. Any further questions, comments? If not, thank you, Robert. Thank you, Adam, for that technical assistance there.